So, good morning, good afternoon, good evening to you, wherever you may be. I would like to use today to cover a couple of stocks quite quickly, a couple of stocks that are discussed a lot on FinTwit, that are popular holdings by many people that I follow and that I see discussed a lot on Twitter as well. So let's go through them in this brutal environment, if I may say. If you've been invested in semiconductors or AI stocks, you must have had a very good time. If you've been invested in inflation-heavy stocks or inflation-related stocks like commodities, then of course you've been having some very difficult times. And I think the key thing to look at here is to actually look at whether those difficult times are going to continue. I know we are in a deflationary environment. We are not seeing the inflation that we saw earlier this year. Against my expectations, because there's a lot of stories about supply side of copper, the supply side of oil, the supply side of other commodities. At the moment, demand drives the price and not supply. And I think that's a really key thing to understand. There's probably going to be some more rate hikes because the market simply seems to, or the central banks seem to be looking for it. At least there's going to be one more rate hike. I'm not sure exactly what the expectation is of the market, but I don't see any rate cuts at the moment. So if the banking system gets into trouble and if there's some really big crises coming up, then maybe that will change. But for now, we should assume that we're still in a very strongly deflationary environment, both in capital goods and in commodities. The first chart we're looking at here is BHP. BHP used to be one of my favorite stocks, and I've invested in it for a very long time. And you can see it's still in a long-term uptrend since 2016. If we go back, we see there's a bearish trend before that. Since 2016, we've been in a very strong trend. You can see there's a thick line here that was actually broken in 2020. That's pandemic related, and I consider that an anomaly. That's why I draw the line a bit differently, but that's generally the idea of the upward trend. So we have a structure here which kind of looked like a complex inverse head and shoulders pattern. You can see a shoulder on this side, which was almost like a rectangle with a neckline or a shoulder line at around $60. And we saw it's almost like a double-headed monster. So we see two heads here, and those heads bottomed at $46, let's say approximately $47. So after that, we tested the $70 level again, and we fell back as per my expectation. I mentioned on Twitter, if you look up BHP and you search for what I posted at that time, $70, I said this could be a perfect sell moment. It did go back. Went back to $60 very rapidly. You can see here an immediate sell-off in a couple of weeks' time. It was the same month, actually, it touched $70. In early February, it still touched $70. That same month, it was at $60. So then you expect that serves as support, and it did. You got an instant white candle here in March, and that white candle gave people hope that we would quickly return back to $70. After that, another dark candle, bad sign. It's a bad omen. And I was watching at this time, especially this level, closed my position sadly just below it, so at 59.5 or something. I closed my position. We went back above to $63. That's when you think you've made a bad decision. In the end, I didn't buy back and I left it, and now we're at 55. We're going to open at $55 today. In my opinion, this structure here, the complex head and shoulder structure, is broken. We're below 200-week moving average. I don't know where this is going to go. I think it's more comparable to what we've seen in 2020, actually. I do not know where this is going to go. I see some kind of support at 52 here, where you've had several tops, so we could actually see that tested, which would also be the ascending trend here. But until that time, I'm not going to touch BHP. I'm going to wait until this bottoms out, and then when I see the first buy signals, then maybe I'll buy back. But until that time, leave it. Another one that I see followed. Okay, so we have an alert here coming in for the Japanese yen. Okay. Another chart that I follow is the SBSW chart, Sibanya Stillwater. Really not looking good. And same scenario, a third test of, or let's say this was the first top here at around just below $20. We went back to it in 2021, 5 years later, tried to break it 3 times, didn't work, and then we got another test here in March 2022, another sell-off because the market accepts this as a resistance level, and boom. Then, of course, buyers will be looking to buy this level here, this zone between $11 and $12, because that looks like a logical place where you could pick up the stock cheaply again. People did do that. It took it to $13 and it kept selling off because you can see that my moving averages here were not broken. The orange line and the light blue line, they were not broken. So this is always a bad time to buy. I use those moving averages as an indication of where we are. What I want to see is something that takes a bit of a longer time. I could actually draw this a little bit. What you want to see is some kind of a bottom like this, and then you want to see those moving averages broken. So I think between $6 and $7 we should be able to reach a bottom, because RSI will probably show this nicely as well, but you'll probably see, if you go to you zoom out to the 2 week, you can see that there's some divergence happening here already. Of course, we don't have a bottom yet, so this would still see a lower low below that 32, but there's clear divergence coming up, which means that we're getting close to a bottom. We haven't seen that here, so it doesn't always happen, divergence, but when you see it, normally it's a good sign that the worst seller strength is actually over. So until we reach this level and we break back above it, $7.98 or $8, I would not touch this. I think, yes, you can try to buy the absolute low here at $7. You might get lucky, who knows. Still, it's a very strong downtrend. We should not ignore that. It's a deflationary market. The RSI short term still sees a lower low here, even though it's higher than the July 22 low. I would not touch this until it reaches above $8, and then you put a stop loss right below the $8 level. So if it breaks down again, then you can at least get out of your position quite cheaply. The 200-week moving average, the dark blue line here, is actually moving downward. Normally not a good sign. The last time that happened, we had 2 years of bear market coming up. So I would not touch this at the moment. Next one I look at here is RIG. Now RIG did incredibly well throughout the good oil years. So from October 2021, we saw a relatively good time. 2022 was a bit sideways, and 2023 has been good again. From October 22, it's been pretty positive, and we moved from $2.30 until $7.50. Now, I do think this is a corrective structure. I think I should put in a log chart so you can see why that dashed line is here. It is a breakout from a long-term bear market. Here, this is a long-term bear market. Actually, it's from the first decade of this century. But this is the line that you can draw where you can see that the breakout led to a strong white candle. I think this is some sort of a rectangle formation between $5.40 and $7.70. If price gets close to $5.40, where you can also see the 400-week moving average actually, so it's not really a major important line, but if we get close to that level again, I think that's a buy. If we break that level, I think it's a sell. And then we might see a test back of the $5 level and possibly a lot lower than that. Until that time, I remain invested in RIG. I do know that we are below the light blue line, below the major moving averages. So that is a little bit worrying, especially with the lower opening at $5.94 today. But until that time, until this level breaks, I'm not going to do anything. Then Petrobras Petrobras, you see some weird lines here that don't seem to make any sense at all. Let's go to the adjusted version and you'll see why I drew them. The adjusted version is what you do. You see the little ADJ option here at the bottom right of the screen. That's what you click to see the share price chart corrected for dividends. What does it do? It basically adds up or deducts the paid dividends from the share price in the past. So the share price might have never touched $2 in 2020, but if you deduct the dividends paid since that time, you actually end up at around $2. And actually, technically, it could go negative even. I don't think we've ever seen that before, but technically I think that is possible because you can pay more dividends than you have than the share price is worth today. So that uptrend is still very strong. We will open lower today at 1162, which is a percent lower, not really relevant for the longer term charts. The trend, the 200-week moving average is still up. The dividends are still amazing. And I think this structure continues to remain intact. I would like to see the top of that channel tested. You can also draw the channel a little bit differently. Of course, this is an anomaly in a way, but you'd like to see something a little bit closer to that. If you draw it this way, then it makes more sense maybe, because you can see several highs around that level. What you normally expect to see now is some sort of a revert, some sort of a return back to the bottom of the channel, which is around $10.50. Now, with the dividend payments coming up, I'm not sure whether that is a very surprising thing. There will be dividends again. You can't see them here yet because I think the dividends for the next quarter have not yet been announced. But you will probably see that on this chart here. Actually, you will see it going back to those levels. But okay. Petrobras generally adjusted version still looking good. No time to buy now because we're at the top of this channel. But I think if it goes back to the bottom of this channel around 10.5, then I would say might be a great time to load up again. Southern Copper, another one that I follow very closely. Southern Copper Corp. This is also the adjusted version. That's why this dashed line here looks a bit weird. If you take it off the adjusted version, you'll see that this is some sort of a megaphone structure. Normally those megaphone structures, if you see a breakout to the upside, normally it's a very bullish sign. It wasn't, and it got sold off. We see some selling pressure here. I hope we stay above this this level here of $63. I think even this $63 to $65, that's a kind of a support zone here. I hope we bottom out there. That's also where the 200-week moving average will cross soon. So far, not that bearish. We could go to the middle of this range, which is also around this level. So I'm not really too worried about this. I think Southern Copper, considering the dividends it pays, 4.8%, still a great one to own. So those are the stocks that I wanted to cover today, 5 stocks. If you have any ones that you would like to see covered, let me know in the comments, and hopefully next time I'll try to cover them. So looking for your feedback. Let me know what you think, and let's revisit this again soon. Thanks. Cheers.